What if building an ADU at your multifamily property could actually lose you money? Well, there's one specific scenario where it's likely to happen. Today, we're going to talk about that. I'm Cody Charnell. I'm a multifamily real estate broker here in Long Beach. And without further ado, let's get into it. So if you're into real estate investing, it's likely that you've heard of accessory dwelling units. And in California, over the last few years, they've really opened up the laws so that now multifamily investors can build ADUs in the backyard of their space, or they can do things like convert garages to add additional units. And this is great news. You know, in California, we have a housing crisis. This is a fast way to add additional housing units. And it's also great because the way multifamily properties are valued is based on the rent that they generate. So if you're adding additional units and more rental income, it's logical to think that you're increasing the value of the property. But there's one specific scenario where this doesn't quite work. And in order to understand why this is, you really need to understand that there's two segments in the multifamily space. So what creates these two segments is financing. So 2 to 4 unit properties use residential financing. These loans are typically at a fixed interest rate for 30 years. So a lot of owners were able to fix their rate when rates were super low back in 2020 through 2022. And they're never gonna have to worry about their interest rate adjusting. And so what we see in that segment is a lot of owners are choosing to hold on to their buildings because it makes less sense for them to sell and have to buy something else at today's higher interest rate. So on this chart, we have inventory. The bottom 3 lines are 2 to 4 unit buildings. So what we see is inventory in that space is basically flat, if not declining a little bit. And so with less inventory in the 2 to 4 unit space to buy, we see prices remaining relatively stable. The second segment is our 5 unit and up properties, and these properties use different types of loans. So these loans are typically referred to as commercial loans. Commercial loans usually are only fixed for 3 or 5 years. Sometimes you can do 7 or 10. But what's happening right now is a lot of people who purchased or refinanced a few years ago when rates were low, their rates are starting to adjust, and they're going from maybe 3% up to 6.5%, which is where rates are today. So those owners are choosing to put buildings onto the market. So we have an increase of inventory. On the other side of the coin, it's also more difficult to buy 5 unit and up buildings today at the higher interest rates because the lenders in that space want you to put enough down to make those properties cash flow from day one. And with rates in the mid 6s, it's not uncommon to have to put 40% or more down to make that work. So we have more inventory, we have a decrease of demand from buyers, so pricing is actually getting worse for those owners. So why does this matter? Well, if you own a 4 unit building and you add an ADU, you take it from the residential financing space into the commercial financing space. And so I want to show you an example of how the numbers might look if you did this and why it may not be the best idea. So this is our example property. This is a 4 unit building that sold recently in Long Beach. As you can see, it sold for 1.24 million. And if we scroll down here, we get a little bit better sense of what this is. So 3 of the units are 2-bed. 1 of the units is a 3-bed, and rents are pretty low. So there's an opportunity here for somebody to increase rents and increase the value of this building by just keeping it as a 4 unit. If we scroll down and look at the photos, we also notice this. So there's a detached building with 4 one-car garages. So this would be perfect if somebody wanted to add an ADU and convert this into one big, let's say 2-bed unit. So let's take a look at the numbers and see what it looks like if we were to add the ADU to this property. So what I have here are 2 scenarios. And in the first one, we're just going to buy this and increase rents and see what happens to the value of the building. So these are our market rents. So we're assuming whoever bought this is going to renovate those units and get $2,100 for the 2 beds and $2,600 for the 3-bed. Plus we're gonna be able to charge $100 for each of those garages. That gives us $9,300 a month in gross rents. And if you annualize that, that's $111,000 a year in gross rent. So right now, 4 unit buildings are selling at around 12.5 times gross when they're fully stabilized, meaning renovated and rents are at market price. So if we take our gross rents and multiply it by 12.5, that spits out our estimated value for this building of just about 1.4 million. In the second scenario, what we're going to do is we're still going to renovate the 4 existing units to get rents up to market, but now we're taking those garages and converting them into a 2-bed ADU, which we're going to rent out for $2,200 a month. So our gross rent is going from $9,300 up to $11,100. And if we annualize that, that gives us $133,000 a year in gross rents. But what I mentioned before is pricing in the 5 unit and up space is actually worse right now. So I ran comps, and 5 unit and up properties are selling at an average of about 11 times gross. So if we do 133 grand times 11, that gives us an estimated value of 1.465 million as a 5-unit building. But this is where it gets kind of tricky, because the cost to do an ADU garage conversion is around $125,000 on the low end. So we're spending 125 grand. We're only increasing the property value by 70 grand. So that's a net loss on our investment by building the ADU. But one thing I want to point out is if you decide to do this, it's not the end of the world, because on your $125,000 investment, you're still increasing the cash flow on this building by $21,000 a year. So if you do 21,000 divided by the cost of the ADU, it's still a great cash on cash return. So if you plan to hold on to this building, maybe this still makes sense. Where you could run into problems is if you have to sell right away, or you need to refinance right away to recoup some of the money that you invested on the ADU. So I hope this was useful. I'd love to hear your thoughts on this in the comments. If you're not subscribed already, please remember to subscribe. And lastly, remember, invest well, trust Cody Charnell.